Tito's Handmade Vodka is America's favorite vodka for a reason. From the first legal distillery in Texas, Tito's is 6 times distilled till it's just right. And naturally gluten-free, making it a high-quality spirit that mixes with just about anything. From the smoothest martinis to the best Bloody Marys. Tito's is known for giving back, teaming up with nonprofits to serve its communities and do good for dogs. Make your next cocktail with Tito's. Distilled and bottled by 5th Generation Inc., Austin, Texas. 40% alcohol by volume. Savor responsibly.
Reality radio for a really great future. We're talking real money.
We're going to forget last Saturday. It's just an aberration. We're going to pretend like it didn't exist. Like, you guys, we're going to pretend you actually called our show at 855-935-TALK. What is our show? Our show is, well, it basically is in one way, shape, form, or another. It's probably the longest running money talk show in America right now, basically.
Probably is. Yeah.
Yeah, in one
right up there for sure.
One form or another. So we're talking about something really important, right? Money's important to you. And if you have some questions about it, well, we give you the opportunity every Saturday to give us a call at 855-935-8255.
And let me add one thing to the calling part, because maybe people, you can call about anything money related. It doesn't have to be investments.
No,
it could be about spending it.
It could be.
And it could be specific. I think that's the other thing people are surprised. If you call us and say, what about this? We'll give you an answer, straight up answer about funds you could be in, people you could work with, all that kind of stuff, straight up.
Or if you want to ask a question that's Pacific, we'll talk to you about the ocean.
You are. That's my job. But
I know.
Over the punster.
I thought I got to get a pun in. I got to get one in.
You got it, man.
All right,
you got it.
That's it. That's all I'm doing for the whole episode. 855-935-TALK is our phone number. 855-935-8255. So we're already in trouble with you for excoriating you about not calling. Now we're going to be in trouble with our friends, the crypto crazies. And
yeah, the calls and angry emails and letters
dislike us again.
Yep, flooding in.
I have a theory about the crypto kids. It's funny how the people who scream the loudest about it are people who either own it or make money off of it through one way, shape, or form. Again, I said that same phrase again. It's people who have a vested interest who scream the loudest. All these folks, it's like, yeah, Bitcoin's the best thing ever because I own some and I need more people to buy it, so it goes up. Well, guess what happened recently? People stopped buying it, and some of your hodlers started cylinders.
Yeah, and by quite a bit too. By the way, we're talking about $600 billion in Bitcoin, or pardon me, in crypto. That's gone up in smoke. Pretty dramatic losses.
Well, and if this was a stock market loss, everybody would be screaming it from the rooftops.
Exactly. Yeah, big time. Because Bitcoin down, I think you said 16 or 17%.
Yeah,
Ethereum down 25%. The wacky, what is it called? Liberty coin or whatever?
No, it's called. It's just Trump.
World
it's
Liberty
Trump
Financial.
Yeah, it's Trump coin. That's down from $45 when it first came out to $6 roughly.
Yeah, and I know part of
nobody's going to use that coin, by the way.
The other part of crypto, I get the sense is it's the excitement of up and down. It's, oh, look at this. This is a roller coaster. I love this. Very exciting.
Does it feel a little to you like the sports betting madness that's everywhere right now?
On basically everything, too. It's not just the game. It's who would be the first to hit a home run, who's going to get a slot, everything. Yeah. Horrible. Awful. Yeah, it's a lot like that. It's the excitement. It's that part of the brain that gets you up and I personally, and I think most of the people that we talk to would prefer not to have their money handled in such a manner. It's just, if you want to gamble, that's one thing. But most of the time people are saving for retirement, etc. They really don't want to see the excitement in that.
Your financial advisor, this is why I hate financial advisors getting into things like crypto or individual stocks or anything like that, is that your financial advisor should not be your croupier, should not be your gambling coach. And that's basically what we're doing when we get into these things. It's okay. If you want to gamble, it's your money. Gamble as much as you want, but it shouldn't be part of your portfolio. Portfolios are not about gambling. They never should be.
The part two that worries me about crypto is it always feels like when these sell-offs happen, that there's two parts that worry, that really upset. Leverage. It seems like people are borrowing a lot of money to buy this. That's part one. And then it always seems like, well, a few people got out right before the big downturn. There was one trade, weird trade.
100 and some odd million.
Yeah, exactly. Oh, they got out right before things went. It's like, how did that happen? I mean, so that feels
how does that happen with
insiderish.
stocks, Tom?
Yeah, well, we know the world there, right?
Yeah,
so,
it's the same story.
Yeah, but I feel like this is more that way. It's more inside baseball. I mentioned this to my wife today. She said, that sounds like a Ponzi scheme. Like the first people in are saying, hand it off to the next. I'm getting my money back and you're out.
And here's the thing. Okay, let me give you, I'm not going to give it to you really. This is just for argument's sake. Let me give you Bitcoin. Let's say, okay, Bitcoin, get it. It's okay. What about the rest of them? What good are the other 9,999 cryptocurrencies? What purpose do they serve except gambling? Can you name one, my little crypto buddies? Name one. Something
criminals need them to pay each other.
No, they use Bitcoin for that too.
Oh, okay.
Okay, they don't use Dogecoin.
Who knows?
They don't use
do
Trump coin. They use Bitcoin or maybe Ethereum. What good are all those other ones? Why do they exist? Should they not exist? Inquiring minds would really like to know. 855-935-TALK, 855-935-8255. Call us.
Tom and Don are talking real money.
Hi, Don McDonald here. So, what's your plan for retirement? No, really. What's the actual plan? Because hoping the market goes up, stockpiling random investments, and praying your gut instincts are smarter than Wall Street is not a plan. It's a guess. And when the market gets bumpy, and it always does, guessing leads to second guessing. And second guessing leads to panicking. That's why you need more than a portfolio. You need a purpose, a strategy, a real financial plan built just for you by a 100% fiduciary advisor who's legally obligated to act in your best interest. Imagine that. Start your plan today with a free, no-pressure meeting at talkingrealmoney.com or call 800-386-3004. That's talkingrealmoney.com, because your future deserves more than crossed fingers and wishful thinking. By the way, no sales pitch, no obligation, just smart help for real people who want to stop guessing and start planning. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
You know, you'd think we could agree on at least one thing with the Bitcoin people, and that is this thing is speculative. I mean, it really is speculative. It went up a lot earlier this year.
Huge.
And now it went down a lot.
Yeah. Bangs around.
That's almost the definition of a speculative thing, isn't it?
Big ups, big downs, a lot of deviation. Yeah, I think that's very true. Sure.
Okay. All right. You want to add something
again,
else?
if you want to own it.
You were all excited about adding something.
No, I was going to talk about the BNB too, the exchange, which has had all kinds of problems
bed
unloading.
And breakfast?
Bed and breakfast. I think it's BNB. I only know by BNB, and somebody sent me a note about it yesterday and said, take a look at this, because they had all kinds of problems paying out people. And they had to end up offering about, I think it was like $600 million in compensation. So, I mean, yeah, it always gets back to me. Oh,
that's the Binance thing.
Yeah, right. Yeah, where they trade a lot of this stuff. So, and again, it's like, well, wait a minute. This is what they do. They should be prepared for big ups and big downs and hand people their money, but they couldn't handle it. They had some sort of glitches or something, I think they said. So,
dude, let me just kind of tell you something.
Please.
This whole thing is run by a lot of people who really don't have a lot of experience in running businesses.
Especially, this is big money.
This is big money. And I have to say, for every one who has a clue what they're doing, there are probably 100 who are just in there on a lark, who just got lucky. They made a lot of money because
right place, the right time. Sure.
Yeah, they took a flyer and it worked out.
Yep.
One of these days, though, it's not.
Well, you may have already seen.
We may have seen the day. I don't know.
Yeah, I mean, the high may have been reached. We may be on our way down. 16% for Bitcoin, 25% for Ethereum. I mean, that's a real decrease. And you correctly point out, had that been with securities that people are more paying better attention to, there'd be probably a rush to the exits and way bigger concerns.
Yeah,
I'll put it that way.
There would be something resembling an equity panic.
Yeah, I think you're right.
And we may still see that in cryptos because you got to think that a lot of people who got in on that whim 2, 3, 5 years ago. 5? Was it that long? Wow.
Yeah, I think it has been.
Who got in then are looking at $100,000 and going, I got so lucky. Maybe I should just get out before this thing tanks.
Yeah, I'm not big on market timing, but in this case, I'd be timing my way out.
Actually, I am a big fan of market timing speculative stuff. My market timing is if you made a lot of money, get the heck out.
Mm-hmm. Yep.
If I went to Vegas and I played blackjack with $500 and I'm up to $50,000, I'm cashing out. I'm going home. I'm not going to let it ride.
No, I think that's good advice. So take it as you wish. The warning signs are all there for me. That's how I put it.
And here's the problem is not only, I'm going to give you that Bitcoin is legit. I don't think it's a good investment, but I'm going to give it to you that it's legit. It is. It's a finite resource that people have assigned value to. I don't know that the value's fair, but it's been assigned. So that's the free market. That's okay. The problem I have is that so much of this market and really so much of the financial services industry is based on, if not outright fraud, certainly deception. There is, it's in all aspects of money because of the profit.
Because people want to make it easy, easily. And the other thing still, and we didn't really even get into this, you're assigning a value. I think the only value to cryptocurrency is whatever the next person says it's worth.
Well, that's what I said. The market has assigned it a value.
Right.
The marketplace
there's
of
nothing
buyers
below
and
that,
sellers.
Though. There's no earnings. There's no.
No.
Purely wind.
But again, you can have a stock that trades with no earnings, no assets,
you ever heard
nothing.
of strategy?
Yeah. No, it has. Wait, it doesn't. It's
not really.
It's got an asset that we're not sure is an asset. But
wow.
The market assigns a value to them. Whether that value is correct or it's correct at the time, but correct tomorrow, we don't know. And by the way,
what is strategy? What impact has this had on the wonderful, formerly known as MicroStrategy, which you may want to readopt that name. I don't know, after slight decrease in the price of Bit, because isn't he? He owns a lot of Bitcoin. I forget how much.
It's on margin.
Yeah, that's what I was mentioning, borrowing up. I mean, and you heard Andrew Ross Sorkin, we talked about last week, talking about one of the things that has led to big declines in markets is borrowed money. 1929 margin, et cetera, et cetera. People get all excited.
Its ticker is MSTR.
Yep.
And let's look at, let's see, its high in July was $456 a share, and it's down to $290.
So let's see, that's 170 on. That's a pretty steep decrease.
That's a pretty steep decrease. And again, there's, you know what this points out very clearly? The downside of leverage.
Yeah,
so
exactly.
Bitcoin itself is only down 16%. But
right,
the Bitcoin holding fund that borrows money to own Bitcoin is off far more. Isn't that?
As I said, you may want to go back to MicroStrategy. That might be more accurate when the price keeps going down this way.
I get it. There's a joke in there.
Well, a small one, just like going to MicroStrategy, but still, it's there. Good luck to him.
So $290.
That's crazy. Craziness.
So it's down $165.
Yeah, from
$466. So it's down. Yeah, it's down more than twice what Bitcoin is. It's down 35%.
Pretty substantial.
855-935-TALK is our phone number. Guess what? Lines are open. Hard to believe, huh?
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
You know, some people are into collecting stamps. That's called philately. Some people are into collecting cars. That's called autolately. I don't know. I made that up completely.
Yeah. What's the third?
Tom,
There's always a rule of three.
No, yeah. Tom collects listener questions.
Oh, I thought you were talking about the planes. I was waiting for a name for that.
Aeronautalately?
There's a lot of lees there.
Aeronautalately. Yeah. I have no idea. I only knew philately. Well, and numismology.
Coins?
Yeah,
numisology.
Something with numismatic.
Yeah, okay.
I don't know. Brain's getting old. Tom's got questions, but we'd love to hear from you. Call us right now at 855-935-TALK, 855-935-8255. Tom's blaming me for the lack of calls on the Saturday show because apparently I didn't plug it enough on the Friday show that I do as a podcast. I don't know why it's my fault, but he needs someone to blame.
The way the cookie crumbles. I got to blame somebody. I'm not going to blame me, obviously.
No, you don't blame you.
No.
You're pretty good about never blaming yourself.
Trust me, I got several relationships. I'll clear that up.
I can check in with your wife. I know she'll agree with me. Yeah.
Oh, no question.
No question. 855-935-TALK is our phone number, but you can also send questions in at talkingrealmoney.com, and that's where Tom uses up paper to print them out because he can't use a screen. I'm not sure why.
There's a lot of big trees here. I'm trying to clean them up, get some sun in here before next August.
But you could use a screen like most people. You started doing it for books, at least.
That's true. I do use a Kindle. So, I'm better. I have a plug-in hybrid. There's a little better. I have electric, all my outdoor stuff, lawnmower, leaf, all that stuff, all electric. So I'm doing a little better.
All right.
Partially. Not good enough. All right, Larry. Larry wrote us from Hood River, Oregon. Beautiful Hood River. I'm 71, would like to have a 60-40 stock-to-bond investment. Another 60% in stocks, 40% in bonds.
Okay.
He has an IRA that's worth $1.8 million, $570,000 in a Roth IRA, and $200,000 in a brokerage account, which I believe makes it about $2.6 million.
And a lot of tax-protected vehicles there.
Good.
That's the tax advantage.
He says he went to ChatGPT, which is why is he asking ChatGPT and then us? I would think he'd ask us and then. But anyway, they said the IRA should be 30% in stocks and 40% in bonds. Now that doesn't add up because that's only 70%. The Roth IRA 22%.
See, they say they had
stocks.
The ChatGPT kind of had a problem with math.
Oh no, I get it now. If you add it all total, 30% stocks, 40% bonds in the IRA. The Roth IRA 22% in stocks. And then the brokerage 7.5% in stocks. I get it. Now that makes sense. What do you think? Does this make sense? Yeah, it does. For a couple of reasons. First of all, it's not exactly how I would set it up, but I would look at it this way. Where do you want the fastest growth to occur?
In the Roth.
Yeah, in the Roth IRA, because that's growing tax-free.
Right.
So yeah, he's absolutely right. The ChatGPT is right. If you can do this, that should be 100% in stocks, which is what they said to do. The best place to own fixed income or bonds because it issues interest, which could be taxed.
Regular.
Yeah. Is?
Regular IRA.
The IRA, yeah. Right. So they're right. Put the bonds there.
And then you put your tax-advantaged ETFs, your equity ETFs, things that if you have muni bonds, tax-free, those can go in the brokerage.
Yeah, I think this is good advice from ChatGPT. You're a big ChatGPT user.
I love CathGPT.
Yeah,
that's my anagram for her because I have her with a female voice, and we chat all the time. We chat GPT all the time. She helps me create cover art for the podcast, and
the stuff is amazing. Just to finish this, if you're working with an advisor who doesn't do this, you might ask them because I do see it. People bring stuff in from other advisors, and I go, why aren't they using what we would call asset location? It's pretty basic today's world.
Because honestly, I bet they don't think of it because they're too busy thinking about the next commission sale.
Maybe. No, but what I see a lot of times is they have the same portfolio in the IRA, the Roth, and the brokerage account without caring and thinking about taxes at all. It's much easier. But it makes literally no sense.
Yeah, but that's
and if you're
the
a
difference.
young person,
that's the difference between these selling advisors, which is, by the way, the vast majority of those who call themselves investment advisors are sales-oriented, commissioned people. They honestly don't have time to get into the minutia of tax planning.
Or they don't know it either, by the way. Their job, as you said, the next sale. So, yeah, this is good, Larry. And what I was saying, for a young person, 100%. You had a question like this, I think, on the yesterday's podcast. That should be 100% in a globally diversified stock portfolio. Makes total sense.
Globally diversified.
Go. Yep.
With plenty of international. Don't lighten it up just because you're an American. I know you're proud to be one, but you need to invest globally. 855-935-TALK is the telephone number to use on the weekends. Just call right now.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Welcome back to the Talking Real Money radio program and podcast. I'm Don McDonald along with Tom Cock. Thanks for being there. Give us a call if you have a question, 855-935-8255. That spells talk, T-A-L-K. Well, okay, I guess I understand why I get a reputation among some of being slightly left of center. It's because, as opposed to the Wall Street Journal, I truly dislike robber barons. I'm not a big fan of people who bend or break the law to make themselves really, really rich. But apparently, that's not the attitude of the Wall Street Journal, according to Spencer Jacob, who has a headline story that just keeps popping up on my feed all the time. Must know that I'll like this. The headline is, "Great cons are part of the American story, and that might not be so bad." Yes, it is.
This is very strange. First of all, I don't know why it was written. Is he pining for Elizabeth Holmes to get out of prison? I mean, I know they released the guy from
Milton,
Milton, which
Nikola. He lied about everything.
They faked up of the truck. Remember, they had the truck being pulled. They just basically
it had no engine in it. It was just
I know, and yet that's somehow okay. And then and in the trial, I didn't know. Alan Farrell, you should be disgusted with. He's an expert defense witness who teaches securities laws at Harvard University. Okay, so. Above me on the food chain, I get that, but he argued that since the stock didn't react on the specific occasions that Milton made many public statements, Milton shouldn't be held liable for them. If information is important, it should change the stock price. I have no idea what that has to do with the other.
I don't know, because he'd been lying all along.
It had been one continuous lie. Elizabeth Holmes, who they cite, they made up tests. They actually fake phonied them so they could sell the system.
Yep.
I mean, this is.
But what cracks me up, though, is we're both history buffs, and what cracks me up is that this article goes back to the late 19th century, and a man many of you have probably never heard of. But he was a very powerful robber baron, one of the most powerful in his day. His name was Jay Gould, and I love this line. Some of the ministers in America at the time called him the Mephistopheles of Wall Street.
I think that's pretty accurate.
The devil of Wall Street. This guy lied, cheated, stole, literally with impunity.
Yep. When they could get away with it, too, which the laws were not as tough then.
Became the equivalent of a multi-billionaire. He tried to manipulate the entire gold market. He tried to corner the market on gold. He lied to get control of railroads, totally lied. Never, ever, ever, ever went to jail for any of this.
But the operative sentence to me in the article says, the fact that so many business practices fall into a legal gray area in America is no accident and arguably a good thing up to a point. I'm going to just strongly disagree with that.
You're left of center too?
Oh, I guess so. I mean, I didn't know this was a right or left. This is just right and wrong to me.
If you
do it
right.
knowingly,
it's right or wrong. Right.
It's just weird. So people were lied to, and yes, it did cost them millions with Elizabeth Holmes, of Milton. It costs them money. How can you say that's okay? That's one.
Because if they did well, then the end would have justified the means. I think that's the argument. If
we're pushing the envelope, we're creating great companies, we're doing all. If it's a great company, do we need to be lied to about it?
That is really a great point, because she was lying about this machine that did all of these amazing things.
Exactly.
Yes, if she'd made one, it would have been great, but then she wouldn't have been lying because it would have actually existed. I'm talking about Elizabeth Holmes and Theranos.
The other thing about Gray is, especially when you reread this article a couple times as I did, Gray, it seems to me, is great for the business, lousy for the consumer or the investor.
Particularly for the investor. Because the consumer, the losses may be minor. No consumers bought a Nikola truck. But at one time, the market value of Nikola was greater than that of Ford Motor Company, which actually made stuff.
I mean, the other thing,
so it had to be the hype.
All this,
it had to be the hype that got that.
The other thing they don't mention about all this is, and you could argue, I guess, but to some extent, the system works because you do trust people generally. Not everybody. And should you look into things? Yeah. Should you read the disclosure? Sure. Should you pay attention to the real numbers and not just what people? Absolutely. But in a general sense, business, investing, these things work based on trust to some extent. And what this is saying is, well, yeah, but there's always going to be people pushing the envelope, and that's good for the system. I completely disagree.
You and me both. And because it's become so hard for us as investors and as consumers to some extent to differentiate between the good, the honest, and the bad, the dishonest. We can't tell the difference because we don't have access to the depth of information that could shed light on these things. Because, by the way, in addition to lying with their mouths, they also tend to lie on paper.
Sure.
So you can't even trust the disclosure documents that are supposed to disclose the downside, because if they're lying with their mouths, and then they're probably not going to have a problem doctoring documents.
No, and again, and now relating this to the securities industry, where there is so much that is gray, frankly.
Oh, my gosh. It's murky as
almost everything. Yeah. So, I mean, the only thing you can really do is only hire a fee-only fiduciary advisor. Yep. Now, some of those people are going to rip you off, too. It happens.
Well, that's because some of them lie and say they are, and they're not.
Exactly. So that does happen.
We know of one on a radio station that's very near and dear to us.
Yeah, exactly. Thank you.
Yeah, I wonder who that could be, listeners. 855-935-TALK is our phone number. We'll have more of your questions one way or another.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Well, the folks at Northwest News Radio have a theory. They say calls have been light ever since the Mariners got into the playoffs.
I tell you what, I was out with my grandsons last night in a public place when the big hit came, the grand salami last night, and it was crazy. It was nuts.
Everybody's everybody's hungover.
Yeah. Yeah, well, here's the thing, too. The other part is your whole life now is built to what time's the game that night? It's kind of restructured, and now I realize there's no game tonight. What am I going to, what am I going to do? I have to watch reruns of, what are you watching, Bewitched or whatever it is?
Oh, God, please, you don't have to. No, really, okay. It's okay.
Is there another bad 60s show?
There's plenty. There are plenty of them. I got to tell you, though, Bewitched, you could tell that as the season went on, the first season, which it went on for 36 episodes.
That's back when people really used to work hard in television.
36 episodes. Wow. Now a season is 8, maybe 6.
Okay.
But toward the end, they started getting some halfway decent writers who wrote for comedy movies and things. So you can see an improvement.
A trend.
You can see an improvement.
Yeah. Okay.
855-935-TALK is our phone number, 855-935-8255. And we've got our first pity call of the day coming in from beautiful Seattle, Washington, home of the Mariners. Tom, welcome to Talking Real Money.
Hey, guys, thank you very much for taking my call. And, Don, just so you know, I listened to you back in the middle 90s when the show was on in the
Wait,
early
that's when
evening
Don was wrestling
in
with
this
Jay
market.
Gould, right? This is the 1890s?
Don't tell people how old I am.
No, 1990s.
Oh, okay. Just want to clarify that a little bit. Okay, good. Thank
He's
you for
worthless.
that. Good. Yeah, okay.
Hey, guys, 2 quick questions, if I may. I've got a portfolio of about $4 million, and in that we have $1 million in a money market. And that's kind of my choosing because of liquidity. We're getting a decent rate and kind of a little low on the risk tolerance perspective. Is there something else you would think might be reasonably good to put that money into that could increase returns?
All right. Well, okay. We got a couple of different things going on. Hold on. We got a lot going on. There's a lot more to this question.
Increased returns?
There's a lot more to this question than meets the eye.
Okay.
$1 million in immediate liquidity is a very big number. And yes, while the 4%-ish returns you're getting right now on money
Still
markets,
good. Yeah.
they're great. What if rates go down to near zero again? What will you do?
I would do something different.
Right, but what would it be? What would the safe thing be if that
And what
happened?
would be the number? How far down would it have to go before you said, "Wait a minute, I'm not making anything on $1 million"?
Yeah.
I got to switch.
Here's the problem. You're not going to know that is ever going to happen. You don't know, but it could. And if it does, it's going to be too difficult for you to react to it because by the time you'll see it go through 3.5, and then you'll go, it's all right, it'll come back up. Then you see it go through 3, and you go, it'll come back up. You see it go 2.5, you go, well, it's still better than nothing. It's better than not getting anything. Then you see it get down to
point.
Then you
Yep.
see it get down to 1, and you're going, wait, there are no other options unless I take a lot more risk.
We would prefer to see you look at your portfolio of $4 million and say, what rate of return do I need for the whole portfolio with already the money set aside for liquidity? That's fine in a money market, but out of $4 million, that sounds like a lot unless you're getting ready to buy a house or, whatever you're going to spend it on. Then you would build the right portfolio, probably less in the money market would be my guess.
Tom, how much liquidity do you believe you need over the next couple of years in case of the most egregious emergencies?
So one perspective is we are kind of eyeing the housing market and thought that money market would be a nice way to purchase, basically outright purchase.
Okay, so you're going to use the $1 million to buy a house is what I'm hearing, correct?
That's a possibility.
That changes this.
but
That
we haven't
changes
really-
the.
That's completely different.
Yeah, see, that changes things completely because now, if you go, let me turn and go to the other part of the question. That is, and really the answer that you're looking for. If you can make more money, have the potential to make more money, or do currently make more money on this money, it will come with greater risk. It must.
But what I'm hearing from him is, what other things can I do with a money market like?
Right, that's what I'm saying. But
to make more.
If you want more money, you got to take
Nothing.
more risk.
I mean, you could go into a municipal bond, all those things, but there's more variability. Don talked about this on the podcast yesterday. You're paying for the additional ups and downs of those investments, where the money market is simply going to pay out that 4%.
Now, having said all of that, there are ways to play this a little bit, and that is to not be betting solely on one-day yields, which is what a money market is.
Yeah.
To have some of the money, the stuff you really need for emergencies, or you might truly buy a house with in the next year or two, that stays in money markets. The rest of it, though, becomes part of either your bond portfolio or you build a CD ladder with that so that you don't worry about changes in interest rates. You're always rolling that shortest maturity out to the longest maturity if you don't need the money, and you get a nice average return across the portfolio. So,
and guess what? You're still making about 4% with those.
You're still going to be making about 4%.
There's not a whole lot of difference
but
there.
Part of that 4% is going to be locked in for longer.
Yeah, true. So, and Don is correct. The money market rate, that could change, overnight, very quickly. We don't know.
It's an overnight rate.
There you go.
Exactly.
That's right.
Yeah. All right, Tom?
Appreciate. Hey, guys, do you have time for one quick question about BA?
Sure.
Boeing, the company.
Real quick, like
Great
10 seconds.
Airplane manufacturer. Love them.
No, we don't. We wouldn't own the stock. We're gonna have to run because this commercial's rushing headlong at us. If I wouldn't own the stock if I could avoid it. Thanks for the call.
Tom and Don are talking real money.
Hi, Don McDonald here. So, what's your plan for retirement? No, really. What's the actual plan? Because hoping the market goes up, stockpiling random investments, and praying your gut instincts are smarter than Wall Street is not a plan. It's a guess. And when the market gets bumpy, and it always does, guessing leads to second guessing. And second guessing leads to panicking. That's why you need more than a portfolio. You need a purpose, a strategy, a real financial plan built just for you by a 100% fiduciary advisor who's legally obligated to act in your best interest. Imagine that. Start your plan today with a free, no-pressure meeting at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because your future deserves more than crossed fingers and wishful thinking. By the way, no sales pitch, no obligation, just smart help for real people who want to stop guessing and start planning. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
For your real life and real future, Tom and Don are talking real money.
Welcome back to Talking Real Money. We'll go back to the calls in just a minute, but I'm going to finish very quickly the call from Tom in Seattle. We have nothing against Boeing, the company, because I'll be the one to take these calls on Monday. Love the company. We do not recommend nor use individual stocks. They're just too risky. Back in the day when Tom used to call Don, you did answer people about stocks and mutual funds, that kind of thing.
Yeah, but I don't anymore because I don't believe that you should own individual stocks. There you go. All right, let's go to Florida real quick. Justin, welcome to Talking Real Money.
Hey, good afternoon, gentlemen. Thank you
Justin.
for taking my call.
Our
I
pleasure.
appreciate you guys, everything you do. At emerging markets, a couple questions. How much is too much, would you say, of somebody with a high risk profile, too much emerging markets in their equity portion? Or how much would you say would be the most that you would want to have if you had a high risk profile? And is there any great advantage if you're willing to take the time to have a separate, like maybe split it between like a blend fund, a value, and maybe a small emerging markets? And then
can I answer that one first real quick? Can I answer that part?
Yes, sir.
Because emerging markets are a very important part of your portfolio. So I would say 65% U.S., 25% developed markets, and then 10% emerging markets in your equity portion of the portfolio, because I don't know anything about your stock to bond ratio. 100% stocks, very risky, a lot of volatility, but I would have about 10% of my equities in emerging markets. What else you got?
How much advantage is there to having a value fund and maybe like an emerging market small blend? And then what about there's a lot of
well, wait, okay, it's impossible to quantify, but there is a lot of evidence that shows that leaning more heavily toward value, meaning leaning more heavily towards small, and having the diversification of emerging and developed markets is long term, because it adds risk, likely to increase your return. And it does so with generally, or at least it's been with less volatility, because these assets, while not directly non-correlating, tend to offset each other's movements a little bit. So it's a big benefit.
Yeah. So yes, you want to have value and you want to have small in emerging markets like you would have in developed and in the United States. I'll put it that way.
And what about having like an ex-China type emerging markets?
Yeah, we run into a lot of people that want to do that. Because they don't trust China, and there's all kinds of subterfuge. If I was building a portfolio from scratch today, it would, yes, include China. China is an important part of the global economy.
Yeah.
Love them or hate them. It's, there's a lot of opportunity there. That's what emerging markets is.
Not just an important part, a critical part.
Yeah.
Of the world's
so if you want to ignore them for whatever political reason or whatever it is, that's fine. I don't argue with people about that, but I will tell you, the expectation, like other emerging markets, is that there will be substantial gains to come in those parts of the world. I'll put it that way.
All right, and thank you so much for the call. We're running out of hour. 855-935-TALK is our phone number. You can call us every Saturday. And you can also send questions in at talkingrealmoney.com using the contact form. You can either type them or you can speak them. Those come up on Fridays usually. And then, in addition to all that, we have been doing something for over 15 years as investment advisors, as fee-only fiduciary advisors, and that is helping anybody who asks with a little bit of help. Just go to talkingrealmoney.com, click on Meet an Advisor.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.